Hi, welcome to talk about crypto today. I'm going to discuss with you 5 ways that you can avoid paying taxes on your cryptocurrency gain. The first way I mentioned earlier in my blog, and that's the easiest. You buy the crypto and you don't sell it. You can hold it for an entire year, and as long as you don't have the sale or that you don't use it to purchase goods, then you have no gain or loss. So just by buying and holding, you do not have to report your crypto gain wherever you go. So it is an unrealized gain, and the IRS is only concerned about the realized gain. That's the number one, and that's easy. The second one, more interesting, is you can use it. Traditional IRAs, 401k is of the retirement plans don't allow you to just put in cryptocurrencies. However, if you use a self-directed IRA, you can do it. Set up a self-directed IRA is not that complicated, but you do need an intermediary. You do need someone to administrate that IRA. Often self-directed IRAs are used for what is called non-traditional type assets. So if you want to buy, say, a piece of real estate, it's going to be a rental real estate that you input in your IRA. You need to buy that in a self-directed IRA. Also, partnerships typically are bought in self-directed IRAs. You can also use this for cryptocurrencies. That would be one way. And then depending on the type of IRA rate you have, if you have a traditional IRA, that at your gains and losses will not be realized until you draw the money out. Realize that. And IRAs, if you draw money out before you are 59.5 years old, there will be a penalty. But you couldn't let that grow. You could do all the trading you want within. If you put that money in already tax as in Roth IRA, right, then that would be a kind of tax-free forever. You can take it out and you would not be taxed on it. They do have limitations. So each year you can contribute up to $6,000 on an IRA. If you are over the age of 50, you can contribute around $7,000. Those are about the rules, but realize you have to use self-directed IRA. That takes a little bit to set it up, and you will have to find an independent administrator for that. So a third way to utilize gains on cryptocurrency and avoid paying US taxes would be to invest in a foreign life insurance product. For life insurance products, or any life insurance product, can be used for many different types of investments and not just a death benefit. You could use it for future gains, could be used in borrowed back from the policy. You could cash the mean, you could create the live stream from the life insurance product. You could even use it for long-term care insurance. There are many different policies out there, and it used to be, and using it to purchase the policy with cryptocurrency seems to be a really good way to kind of shelter the taxable gains and not pay tax on those gains. A fourth way to avoid cryptocurrency gains in the US would be to move to Puerto Rico. Wait a minute, Puerto Rico is part of the US? It is, absolutely is. It's a territory of the US. However, Puerto Rico has recognized cryptocurrency as a potential way to attract Americans, and so they have created a very favorable taxing system for the cryptocurrency. You must have moved to Puerto Rico. You would most likely need to purchase property in Puerto Rico. You need to have a closer connection to Puerto Rico than you do at any other states in the United States. So all of that has to be taken care of. So you have to have your driver license Puerto Rico, and your passport, US passport, is okay there. But that is the way to do it, and you need to have the established residency at least 183 days a year in Puerto Rico. But things like, if your family is in the United States, your wife and children in the United States, and you are going to be in Puerto Rico so that you can trade cryptocurrency, you may have a problem. So you have to make certain that you do establish a bona fide residence in Puerto Rico. And the last way is probably drastic, but it also works, and I have used it for some of my clients, is basically to expatriate. Expatriate is giving up US citizenship. There is a method to do this. You want to make sure you have a passport for another country, and if your purpose to do this is because you want to trade cryptocurrency and avoid gains, of course you are going to look for a country that doesn't tax foreign currencies. So to do that, you would have this other passport of another country, and then you would go to the US embassy and you return your passport. There is an issue that if you have accumulated a large amount of cryptocurrency and maybe other assets in US, you can't just turn it in and walk away with the US taxing authority. There is what is called an exit tax, and there are limitations on that. So that's another thing to check out before you go down this road. But That is another way to consider avoiding gains and cryptocurrencies. I have consistently been saying that we are avoiding gains on cryptocurrency. I have not said we are invading any taxation of the US. There is a tremendous difference between evasion and avoidance. Generally, the difference is jail. Good luck in cryptocurrency. If you find this content useful, please like it, comment and subscribe. Thank you very much.